doing great clinical work with great colleagues, but there was not a lot of upside not related to clinical work that I could of avenues in the profession that I could pursue. I did a lot of quality projects, and I published a study in 2018 and 19. But I think I was just looking for growth, and when I stumbled upon real estate and realized all the missed opportunities that I had missed over the last, like you said, since 2008, all these deals that I could generated significant net worth. I was like, okay, I better get in this industry now and start building a portfolio so I could achieve that growth and diversify my portfolio.
Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show. Welcome to another episode of the Plan B CRNA podcast. My guest today is a good friend of mine who is really doing some exciting things in the real estate world. Ryan Johnson is a Houston-based CRNA of 13 years. And in 2017, he began investing in real estate and soon discovered that he had stumbled upon a journey of growth that would last a lifetime. His passions include spending time with his wife and 7-year-old son, and also teaching healthcare providers the importance of creating income streams unrelated to clinical practice. So, Ryan, it's really great to have you here today, buddy.
Thanks for having me, Bobby. I really appreciate it. I know I've been wanting to get on for a while, and we haven't been able to set a date, but I'm glad to be here. I really enjoy your podcast, by the way. I don't know, you have it's great hearing what other CRNAs are doing to create alternate income streams, and you have that Saturday morning or Saturday night radio voice, as Chris Voss from Never Split the Difference describes. I mean, you have a great voice. I think in your future career, you could easily be a talk show host.
Hey, I appreciate that. And as they say, I have a face made for radio. So, but no, man, it's been a pleasure getting to know you over, I guess it's been 6 or 7 months now, in the pandemic. And I'm pleased that you're able to be here today and share some of the knowledge that you've been able to gain in your journey in real estate. So I'm excited for this one.
Yeah, me too.
Well, yeah, in the intro, we kind of mentioned you got into real estate in 2017. You obviously didn't get in right after the 2008 financial crisis. So, you missed out on some of those big deals, much like I did. And but what was it that ultimately led to your decision to really jump into real estate?
I'd say my decision was, I guess, pushed by several reasons. Number one, it was diversification. And I realized that pretty much all of my family's net worth was tied into stock market, and it was in accounts that I couldn't access, 403bs, 401ks, IRAs, and those are just very, they think you say that real estate is illiquid. Well, those accounts are even more illiquid, because if you try to tap them, you get hit with tons of taxes, tons of penalties, and so I didn't really feel comfortable, having all my eggs in one basket, I guess you can say. On the anesthesia side, I felt overall like maybe I had a lack of growth in the anesthesia world. I was grinding away, 50 plus hours a week in the operating room, doing great clinical work with great colleagues, but there was not a lot of upside not related to clinical work that I could of avenues in the profession that I could pursue. I did a lot of quality projects, and I published a study in 2018 and 19. But I think I was just looking for growth, and when I stumbled upon real estate and realized all the missed opportunities that I had missed over the last, like you said, since 2008, all these deals that I could generated significant net worth, I was like, okay, I better get in this industry now and start building a portfolio so I could achieve that growth and, diversify my portfolio.
Yeah, it kind of mirrors my journey in that mindset. Having the idea of, wow, I'm in this position where I'd like to have some side income, but I can't touch these accounts, without
Yeah.
massive penalties. And no, that's cool, man. So, how did you get into real estate? Like, what did you start with? Did you start with apartments, or did you start with single family homes? How did you get going?
I took a little bit of an unconventional approach, and I started my first real estate investment purchase was a piece of land. I noticed that in my neighborhood, I built a house in 2012, I think, and the county just kept evaluating my lot, and I just saw like the prices of the lots and the taxes on the lots were just going up exponentially. So just the dirt was appreciating. So I was like, I really missed an opportunity over the last 5 years to just, if I would have just bought a bunch of lots and held on to them for 5 years, I would have made a huge return. So I started looking for lots in 2017 in like these gentrifying areas in the path of progress, and made a bunch of offers. And eventually I went to the tax auction, and I walked in on the tax auction on a Tuesday morning. I knew which lot I wanted to bid on. It was an auction style hosted by the sheriff's office. So the sheriffs are, it's just the typical auction that you would see at like a rodeo or something, with the fast speaking auctioneer and stuff like that. So I was there. At an auction is a little bit different, as you have to buy the property cash or you have to buy it with a cashier's check. There's no loans or banks involved. So I had $45,000 worth of cashier's checks in my pocket,
Hmm.
and I bought my first investment property for $40,000 a lot. It was a lot, maybe less than 3 miles from my house. And in that lot, in that area, there was a lot of development, a lot of townhome development. And my initial plan was that I was going to develop 2 townhomes to sell. But then ultimately, we got hit with Hurricane Harvey around that time.
Mm.
Building prices spiked, contractors were hard to get. So I ended up just holding the lot. And when you buy something, at least in Texas at the property auction, you have to hold the lot for a year, because there's something called a redemption period, where the people that defaulted on the taxes, they can come back and buy that lot from you for the price that you paid plus 10%. So you can't really develop anything on it. You can't draw any plans. The title's not clear for up to a year. And then once that year is done, and if you want to build on it, if you want to sell it, you can do it. So I ended up holding that lot for 18 months, and ultimately I just sold the land and I doubled my money in 18 months. So that was my first real estate investment.
Okay. Now, how did you educate yourself prior to doing that?
I would say, like, at that time didn't really have much formal real estate education. I just started tracking the MLS, and I was like, okay, I'm targeting this area because I know this is in the path of progress. Let me just ping all these different lots that are on, and to see how much they're moving for, and I hadn't gone to the auction, but I was tracking auction prices, and I was tracking how much builders were buying these lots for and what projects were being built. So I just, in a sense, I wasn't super educated. I walked the neighborhood, so I knew which blocks were good and which blocks weren't. And I was knocking on doors and to people that live there and be like, "Oh, what do you think about this block?" And they were like, they were looking at me a little crazy, but they understood that I was just checking out the neighborhood. And I was very confident that the land in that area at least wouldn't decrease in value.
Okay. Yeah. Well, and that makes sense, being in the Houston area where you are. So, everything
Yeah,
in Texas seems to be blowing up, and as in many markets across the country, but Texas, Houston, Austin, Dallas, Fort Worth, definitely, all those markets
yeah,
seem to be booming. So,
yeah. It's insane. The population growth is crazy here right now.
yeah. Well, so, and you mentioned that there were some laws that you had to, follow. The information there, like, how did you learn about that? Was that kind of just word of mouth from people that you were talking to about these kinds of things, or how did
Yeah,
that come about?
definitely word of mouth. Like, as I was looking for lots in the area, I became friends with all the townhome builders in that area. So I'd go to their projects, just chit chat with them. I would show up in my work, in my scrubs after work, and everyone knew me as in that neighborhood as the doc, right? Oh, the doc's here coming to check on some projects. And so I would show up, just chit chat with them, seeing
Yeah.
how just kind of complimenting their work, seeing their work, seeing them building these townhomes from the ground up at different stages. I just drop in, chit chat with them. So they once you start talking to someone and developing a relationship, they share their little nuggets with you as well. They're like, oh, you're looking to buy a lot, we'll build for you if you want. Be wary of this and this and this. Be wary of these streets. So you start to just soak up some of their knowledge by networking with them.
Very cool. Very cool. Well, now transitioning into what you started to do next, you mentioned building, and now you've actually built a couple of duplexes on your own, correct?
Correct. Yeah. During that whole period, I stumbled upon the CRNA Facebook group, the Real Estate Investor Facebook page. Which, if you're not a member of that group, you should definitely join them. There's some CRNAs doing a lot of great things in the real estate industry. And someone pushed me to bigger pockets. I think that was in 2018. So I started really getting a formal self education on bigger pockets and started podcasting. And I met a partner there, and it's kind of similar. After work, I'd get off, go visit him at some of his projects, and he took me onto a flip. And so we did a flip together, and it was almost a new construction flip. I brought half of the equity, and I got 40% of the profit. He did all the work, and I ran the budget. Like, he would just give me the receipts, and I would put them on spreadsheets and update them to the cloud. So we partnered like that, and he wanted to keep building because he was more of a flipper and a rehabber, and I wanted to keep doing deals. So I offered on the next deal. I was like, look, there's a lot here. I know how to purchase lots. I bought a lot, and I planned out a project, and I brought all the equity on that. And then he built the project, and we sold, and we split it. So our moment, we wanted to both keep the momentum. So I wanted rental properties, and he wanted to keep building. So we worked out a deal, and he was going to become my builder. So probably in the last 12 months, I've built 2 build to rent duplexes and successfully implemented the BRRRR strategy. And I don't know if some of your listeners don't understand what that is. It's usually buy, rehab, rent, refi, and repeat. But in this case, it's build. So it's like a build to rent project. I'm building it with a line of credit that I have. And I realized that the house hackers in pretty much everywhere in the country, but definitely in the city of Houston, have really run up the prices on these small multifamily properties, these 2 through 4 unit deals, because they can overpay because they're not really putting much money down. They're putting 3.5% for an FHA loan. Some of them are putting no money down if they're getting a VA loan. So they really run up the price values on these things. So I realized if I could build for less than the comps that they're buying at and have some cushion in there, then I can refi it and take not all of my money, but quite a bit of my money out of the deal. And so that's I saw other people doing it in the area, so I wasn't reinventing the wheel. Like, okay, if these guys are doing it and they keep doing it, then they wouldn't keep doing projects that were losing money. So I started, I bought lots in the areas that the duplexes were moving at, and I just basically implemented their strategy into my own business plan.
Now, when we talk about new construction, one of the biggest concerns that people have right now are the rising costs involved. How is that being offset, at least in your area, by the profits that you can actually make by it? You kind of touched on that a little bit, but can you go into more detail there?
Well, definitely with new construction, it's a longer term project. It's not like you can get in this house, rehab it, and then 2 months later or a month later have a tenant in there. It's just not. So you have to number one, search for lots and get on different wholesalers to buy the lots. And the lot prices have appreciated, and they keep appreciating in the areas that I'm building in. And then number two, you have to plan out the project. So in the city of Houston, it takes 45 to 90 days to get all the permits for a project like this. And so your hold time increases. And then you start building, right? And the building could take anywhere, the first project we had it built in 4 months, the second project probably 6.5 months. So your hold time and your hold costs are a little bit more. But yeah, definitely it's been harder to track the material prices. Like, for instance, I framed the first duplex last year, and that cost me about $15,000. And then this one that I framed, it cost me about $30,000. So double the cost of me framing. But I was mid-project, and you can't just stop a project mid-project, because then it's going to go to waste. Your holding costs are going to increase. It's like I was committed to building the project and seeing it through. But on the flip side, rents have increased, so I'm getting $50 more a month per unit in those units that cost me more to build. And the values have increased on these small multifamilies probably about 15% over the last year. So even though it cost me more to build the project, I'm getting a higher appraisal on this one, and I'm getting higher rent. So it kind of evens out.
Yeah. One of the biggest reasons I love real estate is because it is essentially inflation resistant. If you have an inflation of prices, and inflation across the board, then generally your rents are going to continue to rise as well, and things will keep up with that. So that's a great point that you brought up. That hey, yeah, I had to spend more to build it, but I'm also getting more on the back end of it as well. So
Yeah,
now,
I mean, there was
yeah,
many times that I was kind of second guessing it. I'm like, okay, like, should I even start the project? Okay, yes, I'm going to do it. And that's with investing for sure. But there's always going to be what ifs, right? What if it cost me 4 times to build it? What if the thing burns to the ground? But you almost have to counter those negative what ifs with positive what ifs. Like, hey, what if I build this thing and it's a smoking deal? What if I build it and it's I get momentum and I do 5 more of them? So it's easy to get caught up in the negative things that could go wrong without focusing on the positive things that could go right.
yeah. Now, what did you learn in that process? Because you've been intimately involved with so much of this, and so much of the whole process. What did you learn that you wish you knew when you first jumped into real estate?
Let me see what I learned. I learned that relationships are key. Whether it's like relationships, when you first jump into real estate, you're kind of in it so low. You don't have a lot of contacts. You don't have the relationships. So relationships are key. So people that I met so many people during that time. I couldn't have done this project, my first project, likely. I maybe could have, but it maybe just taken me longer. There would have been more bumps and bruises. But as you build, I guess, your Rolodex, there are more people that can help you get through, issues. Like when you have projects like this that are willing to help you, whether it be for free or for money,
Mm,
that can help you get these projects through successfully.
very
So
cool.
build the relationships for sure. I wasn't building the
Yeah,
relationships as much at the beginning, but now that's pretty much my primary focus in any of the businesses that I own is to build the relationships.
yeah. Well, how has being an anesthesia provider helped you in this whole journey? What has that had to do with anything? I mean, obviously you're still working full time, right? And
Right.
so
Yeah.
how has that actually helped you with all of this?
I think, you know, whether you feel this way internally or not, like anesthesia providers tend to at least look pretty calm. Like it could be like a dumpster fire of a case in the operating room, and the experienced CRNA and whatever your anesthesia team, they're just getting to work, hanging the blood, taking care of the patient. Like it's almost like another day at the office, right? And I
Right.
realized I had a little bit of I had that when I walked up to one of these projects and my builder was really stressing about the timelines and the costs and all these other things, and I was like, hey, look, did anybody die out here today? And he was like, no. And I'm like, well, that's fine. Let's just keep going. Let's figure out solutions. Let's figure out solutions, because at my normal job, the challenges and the stress are, someone's going to die, someone's bleeding out, we have a major issue with another person. So unless any of those major issues are presenting themselves at this project, it's not that big a deal to me. Let's move forward.
Yeah, I love that answer because it is so much of it is about perspective. It's easy to get caught up on small things and think that the world is ending or something, but when you come in with a different perspective, it can make all the difference in the world.
Yeah, yeah. I mean, you can't let the small things stress you when maybe you just left the hospital, maybe you just left your W-2 job and you really endured some kind of stressful situation at work, and you go to this and it's like, hey, this is like my stress relief. So you guys don't stress on the job site. Let's go. Let's get the job done.
So now you have this experience with buying land. You have this experience with duplexes and, fixing and flipping and, so you've actually transitioned out of some of those things and into something else. I'd love to hear more about what you're getting into these days.
Yeah. So I realized pretty much all through my investing career, even though I was doing these smaller deals and building these smaller projects, the content that I was consuming and the education that I was consuming was really focused on the larger stuff, right? Maybe 20 plus, 20 plus unit apartment complexes, 100 plus unit apartment complexes, just because the partnerships and the teams and the financing of those type of projects really just, I was amazed at how people could do that. So I decided to put my money where I guess put my money where my mouth was at some point last year, and I invested in a passive deal, and it ended up being like a smoking deal. It's in Houston. It's a 228 unit apartment complex, and the Houston market has appreciated so much. I mean, this sponsorship team is, they put some money into it, but they're probably gonna exit this deal, and it's going to be over a 2x deal over 5 years. That's how confident I am in it. So I wanted to, for me, this is a journey of growth, and that's one thing that I realized with real estate is the only ceiling that you have is the ceiling that you put on yourself. And so I want to keep growing this thing and keep expanding my business, and it keeps expanding the portfolio. So I joined a mentorship program in February of this year, and it's like a multifamily mentorship program, and it's more focused on the commercial acquisition of apartments, and it's not just only large apartments. There are guys in that program, or girls as well, taking down 10 plus units, 20 plus units, 200 plus unit deals. So that's definitely accelerated my growth in the real estate industry. It's there's probably 200 people in that program all over the country. Great coaching, great mentorship, really people that will question you and put you out of your comfort zone to force you to grow. And that's kind of where I've gone from then. So I've recently partnered with a local operator in Houston, and we're looking at deals together. So I'm really excited about that, and I'm thinking that there's going to be a really exciting opportunity in one of the great Texas markets coming up soon for people to invest in.
Very cool. Very cool. I'm excited to hear more about what you're into. And so when you're putting together a team and you're talking about taking down some of these properties, what are the different members responsible for in that team?
So this team is they have the lead sponsor tends to be the head acquisitions guy, and he's got about, let's say, 950 units under his name that he's the lead sponsor on. So he's an acquisition guy. He has the broker relationships. He has the track record to be taken seriously. Because if I'm going to call right now a broker and try to buy a 300 unit apartment complex, and be like, okay, like, have you ever done this with someone before? And I'm going to be like, no. And they're like, okay, well, won't you do this with someone else first before we sell you this deal? And so he has the track record. And then they have an underwriter, and this guy's an Excel whiz kid on the Excel, and he does all the financial modeling. And then they have guys that have like better contacts with vendors, maybe with property management, asset management, and they have capital raises as well. So they have guys that their focus is just, I'm going to bring investors to the deal and offer this opportunity to my investor base. So it really is a team approach on these larger deals versus building duplexes. You have a team, but it's a smaller team, and you may own it, but you make all the decisions on that. Like, for instance, I was dealing in one of my other properties with an HVAC this past weekend, not the new one, but an older rental that I own, an HVAC issue all weekend, coordinating that repair. On these larger projects, you have an asset manager, but he's managing a property manager that will be dealing with all these smaller issues that come up.
Okay. Very cool. Yeah, that's been my experience as well. And I can certainly attest to, the benefits of passive investment. I really have enjoyed being passively invested in some of these real estate deals, and seeing how they pay off, not just on a monthly or quarterly basis, but over time as a deal comes to greater maturity, seeing how, and especially through COVID, that was one of the big things was, everybody comes to me and asks, oh, well, what happened during COVID, and how did things go during COVID? And I'm like, there was no change. Like, there was no difference in what happened during COVID versus what I would expect otherwise.
Yeah, I mean, I think the people that sat on the sidelines completely during COVID, and there were some people that just, that maybe they were looking into getting into real estate, and they just, okay, it's COVID, I'm spooked, I'm not going to do it. And there are people that were in it that just kind of stepped back, and they missed some really good opportunities. And now, I mean, whether it's single family stuff or small multifamily or, apartment complexes, if you would have bought an apartment complex 3 months into COVID, you could probably sell it now for a ton of money just in a year and a half. So it's you have to, like I said, you have to push past the doubts, push past the what ifs, and make an educated decision. Never gamble, but just recognize the fear for what it is, and just push through and implement the plan.
For sure. And for folks that are looking to get into apartment investing, what are some of the big steps that you feel like they need to be taking right now?
I mean, definitely education. There's like a motto within my mentorship. It's like a education plus action equals success. And you have to get educated, and you have to be able to put yourself out there. So get like a baseline education so you can talk shop. You could tell, like, for instance, in the operating room, the intern, or not even the intern, the med student is kind of standing on the sideline, and they can't really talk shop about a plan, right? They just kind of just a silent person just soaking it all in. But those that talk shop, that are in their interaction, they're going to learn a lot, and they're going to, I guess, get heads to turn their way. So don't be afraid to put yourself out there, get a baseline education, and just network like crazy, because you never really know who you're going to meet that can give you momentum, offer you a partnership, just share some little idea with you that becomes like this idea that in real estate, I mean, they could share an idea with you or a partnership, and that could just completely catapult you on another level. So networking, education, and mentorship.
Very cool. Yeah, I completely agree with that assessment. So, well,
Yeah,
go ahead.
on mentorship, one nugget on mentorship is, I just read this book, Who Not How, and it kind of, it talks about, when you say you're going to buy an apartment complex or you're going to build a duplex, it's average, the average person, it's very human nature to say, okay, like, how do I do that? And when you think about how and all the steps to build a new home, or all the steps to purchase a 100-unit apartment building, it can seem very daunting to try to do it by yourself. But the author, he wants you to rephrase that line of thinking to, like, who can I meet that can help me do this? And that's kind of the approach that I've taken now. It's like, okay, I want to buy an apartment building with partners. Who can I meet? So I need to seek out partners. I need to seek out mentors. But he also teaches you how to approach people that you want to be mentored. And you almost have to look at it as like, what can I offer them? Not what you offer them. You know what they can offer you. But for them to take you on, it's going to take time. It may cost them money. It may cost them productivity. So what can you offer to them that can almost make the relationship mutually beneficial?
Yeah, I agree with that wholeheartedly. That's something that I see all the time in some of these message boards and things. Somebody's like, "Well, I want to learn about multifamily. I just want to find a mentor." And it's like, okay, but that's great. What are you going to offer them? Like, you're trying to take up somebody's time. You need
Yeah.
to be coming to the table with something. So either, like, hey, I'll be boots on the ground in this area. I just need somebody to kind of help me figure out what it is I'm actually looking at. And, but I'm in a good market, and I want to start building these relationships. So I've got relationships that you can benefit from if you just kind of coach me on how to speak to people, or, how to do different things. And so, you either have, money, hustle, or knowledge. You got to have two out of those three to make anything work. And a
Yeah.
lot of people, it's the hustle part that they, maybe aren't really ready to get into. They want to be told everything, but they're not willing to do that work.
Yeah, no, I agree. You don't want to invite someone out for coffee to kind of pick their brain, and on that first date, I guess you could say, ask them to be your mentor. Because a mentorship, it's almost like a marriage. The mentor invests not only time, but they invest probably some emotional capital into you, right? They want to see you succeed, and if it's a true mentor, and maybe becomes like one of your lifelong mentors. Like, for instance, my mentor in the small multifamily space, like, he really wanted to see me succeed. He's like, okay, but he invested a lot of time, and I had to provide value to him. And, like, I'm running his budgets, I'm providing capital for his projects, I'm sourcing lots to build new projects. I'm kind of like the person that he could bounce off any ideas at any time, really, if he wanted to, about real estate or about certain deals that we were going to do. So I had to open myself up, and you have to sacrifice some of your time. But I would say, if you're looking for a mentor, you want to build that relationship, that first, before you just flat out ask them. And I don't even know that I would flat out ask someone to be my mentor. Like, hey, will you be my mentor? That kind of sounds like, hey, will you go to the dance with me? Right?
Yeah.
It's
Yeah.
it's
Check yes
it's
or
like
no.
yeah. So you develop this relationship over time, and if this person keeps coming back when you keep asking, and you start getting invited to do maybe some deals, and you kind of keep getting sucked into this mentor's inner network, okay, then he's probably your mentor. Maybe it's not official yet. Maybe it's not Facebook official, but if you're in there with him doing deals, then okay, and you're learning from him, then he's your mentor.
Yeah.
or she, your mentor. Yeah.
Yeah, I do think people get too caught up in the name of, well, this I'm a mentee and this is my mentor, and whereas it's so much of it is just, hey, start those relationships up and you're going to learn things from people, and surround yourself with people that know so much about other things that you don't, and you will learn from them, and then you can take that knowledge and maybe help somebody else out along the way later on. But
Yeah, and for instance, like I paid for some mentorship programs, so I'm in a mentorship program. We have assigned coaches, accountability coaches, to make sure you're on track. We have like a deal coach to pitch deals to, that they can kind of poke holes through deals there. And it's just within that paid program, it is you have mentors, but in a sense, almost everyone's a mentor and everyone's a mentee, because if anybody has a question, they can throw it in these social media groups, and that question is going to be answered very, very quickly by multiple people with a lot more experience than you. And if it's not answered on Facebook, jump on a call with that person and pick their brain and get their insights. So I did pay for some mentorship, but it's kind of odd, like the deal that I'm about to be a part of is that guy's not a part of my mentorship. So that's another, I guess, nugget that I can share people is, if you approach these mentors or partners with a 1 foot in, 1 foot out mentality, then they're not going to bring you on board. But once you're all in, they're like, okay, like this individual is very serious, he's all in, then it's going to open up a lot of doors for you.
yeah, I agree with you. So Ryan, I want to give you a chance to talk about your new venture and your business that you've started, and give you a chance, give other people a chance to get a hold of you. How can they do that?
Yeah, so I started a company. It's called Streamstack Investment, and how I describe real estate in general is, real estate is, I kind of envision it as like an escalator, right? You're putting a deal on the bottom of the escalator, and as you're building out that deal and you're getting cash flow and you're building equity and it's appreciating over time, it's riding up the escalator, and you're putting another deal. And my goal is to put at least one or maybe two or maybe three deals on that escalator every year and just have it running. Because as those deals are running up that escalator, my net worth is increasing, my passive income is increasing. And as that deal, I say maybe I sell that first deal, all that equity is just put onto the next deal, and that escalator just keeps going higher and higher. So that's kind of how I would explain it to people. And I call it, and those deals are income streams for me. So you have to benefit from the power of real estate, is you really have to stack the income streams on top of each other. Because when you start stacking these deals, the depreciation really becomes powerful, because you're not paying taxes on a lot of its cash flow. So that's my company. It's called Streamstack Investments, and we're focused on multifamily acquisitions, say like 75 units to probably 250 units, mostly in the state of Texas, but open to partnerships and exploring partnerships in other Sunbelt type markets. Um, I realized, while as I was doing all these smaller projects and sharing some of the successes that I was having with these smaller projects, a lot of the people at the hospital were like, oh, I have some capital, I'd love to put it to work. And partnering on a duplex is, it's a little bit difficult. Like I can afford to keep a duplex myself with my CRNA income. I don't need some financial backing of a surgeon colleague of mine to build a couple of duplexes. But a lot of these healthcare providers, they want to diversify their portfolio. They just don't really have time to do it. They want to focus on their medicine or their medical career, but they know the importance that all of their, just like me, all of my income, all of my net worth was tied up in the stock market, and they realize that. So, my goal with this is to, help these individuals create and stack passive income streams over the lifetime. And I think the earlier that you get in, the better. If you're a new CRNA or a new anesthesiologist and you start building these passive streams when you're in your early 30s, and you add a deal to the escalator every year, but living within your means, and add a deal to the escalator every year, when you're late 40s, early 50s, you have a lot of options. And I consider wealth to be options, not necessarily how much I made last year. It's like, okay, if I have 6 figures of passive income coming in after 15 years of real estate investing, then you have options, and you can take more time off to be with your kids. You can go part-time, depending on your lifestyle. Maybe you can walk away. So, I want to help healthcare professionals, in a sense, construct their own lives and construct their own schedules. No one likes having to request off to go to their their kid's first day of kindergarten, or being denied time off to go to a conference. And, if you have significant passive income streams coming in, that just gives you more power because you have more options. Contact wise, anyone can reach out to me on Facebook at any time. I'm on pretty much all the social media sites. My email address is ryan@streamstackinvest.com. You can hit me up on my personal cell phone. I don't mind. It's 713-292-3320. And, whether you want to talk apartment investing or duplex construction, I like having conversations with people about real estate.
Very cool, man. Well, we're going to put all that in the show notes, and that way people can get a hold of you however they need to. Ryan,
Awesome.
I want to thank you for being here today, man. This has been great to catch up with you a little bit, and I think that the listeners have really gotten so much out of this discussion.
All right, man. I really appreciate it, and let's keep networking and connecting, and let's go to some meetups together, man.
Absolutely. I'm looking forward to it, and hopefully we can work together at some point. I'm very interested in those Texas markets, as should be a lot of people.
Yeah, I mean, that's my goal. Is like I've been establishing a lot of solid relationships in the Texas market, so I think we can definitely do something soon.
Cool, man. Well, hey, again, great talking with you, and we'll keep in touch.
Appreciate it, man. Have a great day.
You too. The thing I love about CRNAs is their love of learning. I've worked along some of the smartest and hardest working people in healthcare. But unfortunately, as Ryan alluded to, many of us reach a ceiling for our personal growth within the profession. Whether that's due to local markets, workplace dynamics, or politics makes little difference. At the end of the day, most of us experience some form of stagnation within our careers. And while Ryan wanted to continue challenging himself with real estate, he quickly learned that he couldn't do it alone. So when looking into any new venture, whether that's learning to play a new instrument or finding a new hobby or creating a business, mentorship can really help you accelerate whatever growth it is that you're seeking. I hope you guys enjoyed our discussion today, and I really appreciate you tuning in. I'll see you next time on the Plan B CRNA podcast. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.